What's up, guys? Today we're going to answer a question I get asked all the time, probably one of my most frequently asked questions, and that is, what is my biggest investing mistake that I've ever made in my entire life? I'm going to answer that and a bunch of other questions as we celebrate 25,000 subscribers here on YouTube. Thank you guys so much, as well as 3 years now as a content creator. It feels like only yesterday that I was uploading my first video and never thought anything would ever come for this. But I reached out to you guys on Instagram and also on YouTube and asked you if you have any questions that you want me to answer. I have not done a Q&A in a real long time. I'm going to try and get through them really quickly, and I'm going to answer as many questions as I can in an appropriate amount of time. Let's dive right into it. Question number one, if I had 10 grand and I could put it into any ETF, what would it be and why? Well, for those of you that have been around for the 3 years know that I am a VTSAX fanboy. So I guess if we want to convert that into VTI, the reasons there is no better way for long-term growth with the least amount of effort and thinking and stress and volatility than going with something like a total stock market index fund. I'm going VTI all of the way. If I had 10 grand, that's exactly where it's going if I had to put it into an ETF. The next is, where do I keep my emergency funds? I've had my emergency funds in Capital One in a savings account, their money market account. Now, granted, I know that there are some banks that have better interest, and I've done a number of videos on Capital One. But number one, I like to have a branch. And also I realize that when we're chasing around these fractions of a percent and moving money here and there over the long term, it's not going to make that big of a deal. I also love that Capital One allows me to make multiple savings accounts with just one login. I'm sure there's other banks that do that, but I love the feature. And like I said, Capital One has never given me any reason to leave. I keep all my emergency money that I have in cash there. And as you know, I also treat my Roth IRA as a part of my emergency fund because you can withdraw your contributions at any time. So also I have some money in there that I do consider part of my emergency fund. Somebody asked, what's the best way to make passive income? I do a monthly passive income video. I will leave the most recent version of that up in the cards and down in the description below. You could check it out. But there are literally hundreds of different ways that you can make passive income, not only here on YouTube, but in general. The next question I got was actually a YouTube question, which I love YouTube questions. It says, like, what do I tell newbies that are starting off? And this would be from like non-production aside, because I think somebody asked a production question. But if I could go back now, what did I learn? Well, I definitely would know and tell people that are new that generally subscriber counts don't change people. So I was so timid to reach out to people for collaborations and advice because I saw how many subscribers they had. And and it wasn't until I started to gain subscribers or people just were super friendly and reached out to me, I accelerated my channel so much more when I started to network with other people inside my niche. I jumped in mastermind calls and I just got more involved. And I didn't worry so much about, who's a big shot and who's going to blow me off or who's not going to respond. If you're new, reach out to creators, reach out to people. If you have some value that you can add or if they like you and your content, there's a very good chance they're going to collaborate with you and really help your channel grow in those early stages. And it's one thing that I wish I would have done 3 years ago when I started my channel. The next question, somebody knows that I'm a lacrosse guy. They said, time and room 10 yards from the net. Am I going low to high or am I taking a bounce shot guy? I'm an old fashioned, played lacrosse in the late 90s. I'm going to take my bounce shot from the attack position. I was never a low to high guy. I was always an on the crease guy, mostly a feeder from X. But I did like to receive the ball coming around from behind the cage, and it was usually always a bounce shot for this guy. The next one's an investing question. Somebody asked, do you contribute to traditional accounts and then do Roth conversions or go right from the Roth to start? Actually, in the podcast episode I just filmed with JJ Buckner yesterday, we talked about this particular question, and the Roth IRA is so overlooked. I regret so much that I was so old when I first learned about it. If you have earned income, the Roth IRA, that should be your first go-to. If you make too much money for the Roth IRA, definitely do conversions. And once you separate from service and you have some 401ks, 403bs, or 457s that you can start to roll, yeah, it might be a good idea to think about doing some conversions, rolling them into Roths. You won't be able to touch them for 5 years when they are conversions, but they are going to grow tax-free after you pay taxes on that conversion. I'm a big fan of both conversions and also maxing out my Roth IRA. It is the first thing I do when I wake up from my hangover on New Year's Day. The next person asked, how do I remain so grounded with like positivity when, there are trolls out there and there are some negative DMs and comments, and I'm not going to like be cliche and tell you that I can just brush everything off. I'm going to be honest. Some comments, they really hurt. And generally they're not the comments towards me. They're the comments to the people around me. For example, when I talked about how I don't want to invest in Altria because I'm just not a fan of, cigarette companies. My mom died of lung cancer, and people in that video attacked my mother. And those comments, they really, really do hurt. But I think there's like two ways I kind of deal with it. One, I read a lot of my positive comments as well. When I used to play poker, somebody told me like, everyone remembers when you get a bad beat, when you get sucked out on the river, but nobody ever remembers when you suck somebody out and you got lucky. So I really try and stay grounded and stay positive by just reading the positive feedback. Guys, when you leave comments inside creators' YouTube channels, they're going to read them eventually, and you really do have the opportunity to make someone else's day. So whenever I see a real negative comment, there's usually 3 to 4 comments right behind it that are awesome. I have one of the most loyal YouTube subscriber followings, and I get that from my peers as well. I have a strong group of people here, and they really help me stay grounded. And then also, I think that being a teacher gives me a little bit of a thick skull. I'm surrounded by teenagers all day that want to tell me what a loser I am and how goofy and dad joke I am. But I'm not going to lie, sometimes the comments do hurt, but it's just part of the game, and it's something that you realize, and it's definitely one of the bigger downsides of some growth. When I was a smaller YouTube channel, all I got was thumbs ups and "you're great, Brad." And then the thumbs down start coming in, and people start calling you an idiot and straight up making fun of you for everything from my teeth being yellow all the way to like, I don't know, I can't grow a beard, whatever. And then the shots that people took at my mom, my dad, when I made videos about them passing, those are pretty much the worst. Somebody asked about transferring funds from like one vehicle to the next vehicle, and if it's easier to transfer or is it easier just to sell off the stocks and then rebuy them in another vehicle like a Roth IRA. Like say you have a brokerage account and you want to start to put it into Roth IRA. Is it easier to transfer from the brokerage account into the Roth? It really depends. And to be honest, I generally am just going to sell. And I'm going to find some stocks that don't have a lot of capital gains, or I'm going to do some tax loss harvesting. I personally do that right now because I have to do a Roth conversion ladder, and I like to do that one time. And I don't always have the $6,000 right away. So what I'll do is I'll invest that money inside my brokerage account or my dividend account. And then when it's time to re-up my Roth IRA, what I'm going to do is I'm going to end up selling off stocks inside my brokerage account, and then I'm going to do my Roth conversion ladder with them. So yes, you can transfer. There's usually going to be some fees and things like that. And most of the time, the fees should outweigh your capital gains unless the markets are really, really up. But if you're looking to transfer, and I would really only be transferring into a Roth. Other than that, not that big of a deal. Keep your money is where it is, and you should be fine. But yeah, generally, I personally, when I'm going to move stuff, I usually sell them, take the money out, and then put them back somewhere else where I need them. Another great investing question about the 401k and 403b. Somebody's asked me like, my 401k is garbage. The fees are ridiculous. Should I still put money into the match because it's free money? Or should I put my money elsewhere? I personally, I've never had experience with this because I've never had the opportunity for an employee match, and you'd have to run the numbers. But I'm going to say if you can get free money from your job as well as save some money on some taxes, I'm going to say at least do that free match. Do the employee match and then go into the brokerage accounts or other investing platforms that you might want to choose. But yeah, sometimes a 401k, 403b can be really crappy, and that's just, it is what it is. But go for the match. Definitely go for the match. Somebody else asked a mistake on YouTube, and I can tell another mistake definitely for somebody that's new in YouTube, and that's don't get so caught up in the wrong analytics. Analytics can be your friend. Things like click-through rates and watch time retention, those can be your friends. But vanity things like subscribers and really views, they're going to fluctuate. I wish I wouldn't be so in the spreadsheet. Kind of like with personal finance, right? Like get outside the spreadsheet and live a little. The same as with YouTube analytics. Use the ones that are really important, and then don't really worry so much about the ones that are just vanity, aren't showing true success or your true work ethic. You can change your CTR, your click-through rate, with a good title and a good thumbnail. That's something that you can put in the work, and you can change that. Views and the algorithm and how many subscribers you have, you really don't have a ton of control over that, so try not to worry about the things that you don't have in your control. And to follow that up with YouTube, somebody asked like, what does my production look like? How did it start? When it started, guys, I started with a webcam, and that was it. I made a video about it. Maybe I'll link that initial video. My first setup that I used for 2 years almost. Last March, I bought my first camera. And actually, why don't I just take a picture? I'll show you exactly what I'm looking at. So here's exactly what we're looking at. That's my brother's football jersey. He passed away. That's who I like to talk to. This is the Canon M50. Right above me, I have a Takstar. I think this microphone was worth like 25 bucks. And then I have my 2 key lights. This came in a set, which is also linked. This was pretty cheap down below. And that's really what I'm using as far as production. For my editing, I'm still using iMovie. It's what I know. It's what I like. There's some flaws, but it's free. And it's what I've been using since day one. I'm still using it 3 years later. I actually bought Adobe products and I didn't really like them that much. So I went back to doing that. As far as my thumbnails, I started on a website called Canva. I liked it a lot, just had limitations. So I used a free software now. It's called GIMP, G-I-M-P. Definitely a learning curve, but there was videos on YouTube, so I checked it out. And once I figured out that learning curve, I've been using that program for about, I would say 6 to 8 months now. And as far as production, I make 2 videos a week. At this point, like sit down, record, film, get it out, anywhere from 2 to 3 hours. So maybe like 6 hours as far as production, editing and everything. And then probably another couple hours every single week answering comments, sitting on Patreon, talking. I'm on my Discord chat on Patreon like probably 3-4 hours a day as well. So that's probably too much. But I don't know, it's hard to really put a timestamp on it. But when I wasn't working, I could wake up on Monday morning, Tuesday morning. I could come up with my last minute ideas because I always have ideas running through my head. I film a video, sit down, edit the video while I have a cup of coffee, maybe my breakfast, get it up. While I'm posting it, I'm playing with my daughter, checking out my computer, walking by, answering comments, and that's it. But it's really been a part-time job, and the workflow has definitely gotten quicker as I've become more experienced in the process. I know some people spend hours and days and thumbnails and can take that. That's just not my style, and it's not currently where I'm at in my YouTube career. Just not that important to me. Somebody asked about the FI number, and them and their spouse are at 2 different spots in their life, and that's actually exactly where I am. When my wife and I figure out our FI number, we know that I'm probably going to retire 7 to maybe 8 years before her with our age difference. So we figure out what our FI number is going to be, with my side income once I lose my teaching income. And if things work out and she can retire a little early, so be it. But right now, we assume and we know that when I retire and I quit my teaching job, she's still going to be working as a teacher. That's where we'll get our medical benefits and have more of a secure income while I take things like this and other things I'm working on to create general income and allow me to, retire a little bit early. And finally, guys, my biggest investing mistake I've ever made, it's actually kind of 2 answers, I'd say. The first answer that I have is the biggest mistake I've ever made was not realizing and truly understanding how much debt was holding me back. I tried to be an investor. I tried to buy stocks early on when I was younger, and I look back in retrospect and I did not look at the debt piece, and the debt piece really held me back. My net worth stayed flat because of debt, because all the money I was getting from my investments, I was just paying interest back on debt. I wish that I would have really thought about it. I wish I would have found Dave Ramsey earlier. I wish I really would have looked into debt and saw how much it really truly was hurting me. If I would have tackled my debt earlier when I could have, my whole financial situation would be different. The next biggest mistake that I made was listening to the guy in the office that came to my office and told me that he had a great deal and he was going to help me with my retirement, and he gave me an actively managed fund, and I did not do my own research. Every time I've listened to a friend or didn't do my own research, I got myself burned. So I paid years and years, almost 10 years of ridiculous fees to Voya when I could have not done that, just done a little bit of research, and my whole situation, it makes me sick to my stomach to even think about. And the last mistake I made, which probably gonna get me some flack, I went too hard on Dave Ramsey. I give Dave Ramsey credit for helping me get out of debt, but I think what happened as a true Dave Ramsey loyalist at the time, and I see it now with people that are also Dave Ramsey loyalists, is I got too fixed-minded. I did not understand that you really do need to create your own personal journey. You need to learn there are separate paths for every single person. And by me just diving into the baby steps and putting on my blinders and not listening to the perspectives or not listening to other things, it held me back a little bit. I probably would have paid off debt in the same time. Like Dave Ramsey's the reason I paid off my debt so quickly, but being too hard, I also lost friendships because, I used to argue with people about things that now I'm like, I wish I could contact them and not argue those things with them. But I think it could be Dave Ramsey or anybody. Don't go too deep into one philosophy. Don't just be a dividend portfolio guy. Do dividend and growth. Don't be just a real estate investor. Have some stocks as well. Don't just be an index fund investor. Have some individual stocks. All of these different things are going to round out your personal journey. They're going to make you overall more financially literate, and therefore you'll be more successful with money. Thanks to everybody that left a question, and thank you guys so much for the huge support that I've gotten, especially in the last couple months. So many new subscribers. I really appreciate you every single day. If you want to get more in-depth and personal with me, guys, I leave a link down to my Discord and my Patreon. Consider becoming a Patreon member. We talk about everything that you could possibly think of in detail. Like I said, I spend way too much time on it. And a huge shout out to my 21 Patreon supporters. You know who you are. You know you don't need me to call you out by name. Thank you so much for the insight that you give me and the support you give me as well. Until I see you guys on the next one, stay positive. Work really, really hard. Always, please be kind to other people. Hope you have yourself an amazing day and an even better tomorrow.